Income Follows Assets: The Essential Guide to Building Wealth. Written by Ronnie Rowland, published by Growth Literacy Lounge. Introduction. In this book, you'll embark on a transformative journey to understand how managing assets effectively is not just about financial acumen, but a holistic approach involving strategic thinking, continuous education, and ethical practices. The central thesis we'll explore is simple yet profound: income follows assets. By learning to acquire, manage, and grow assets, you can create a sustainable income stream that leads to financial independence and allows you to make significant contributions to your community and beyond. Why focus on assets? In today's ever-changing economic landscape, having a stable source of income is not enough. The true path to long-lasting wealth and security lies in building and managing a portfolio of assets that appreciates over time, generates revenue, and withstands economic fluctuations. This book is designed to guide you through the complexities of asset management with clarity and practical advice. Join our vibrant community of seekers and learners by subscribing to the channel. Every subscription is a token of encouragement that fuels our ability to bring you more captivating and thought-provoking content. Subscribe now, comment, like, and be part of the movement shaping the future of learning and growth. Please let us know what you are struggling with in the comments, as your feedback helps us tailor our content to serve you better. Chapter 1: Understanding Assets. At the very foundation of wealth building lies a crucial concept: assets. But what exactly constitutes an asset? In the simplest terms, an asset is anything you own that has economic value and can potentially generate income, increase in value, or both. This includes tangible assets like real estate and vehicles, financial investments such as stocks and bonds, and intangible assets like intellectual property and skills. Understanding the different types of assets is critical to developing a strategy for wealth accumulation. Physical assets: tangible assets, such as real estate, machinery, and commodities. They are often appreciated for their stability and tangibility. Financial assets: these include stocks, bonds, mutual funds, and other investment vehicles that provide potential income through dividends, interest, and capital gains. Intangible assets: perhaps less obvious but equally valuable. These include copyrights, patents, trademarks, and even your personal and professional skills. Why focus on assets? Assets are pivotal in building wealth because they provide security and potential for passive income. Unlike labor, which requires time and energy, assets work for you around the clock. They can appreciate over time and be leveraged for further financial opportunities, such as taking loans against them to invest in additional ventures. Moreover, asset strategic acquisition and management form the backbone of financial independence. By generating income not tied directly to your time, assets provide a buffer against economic downturns and personal setbacks. They offer a safety net and a launching pad for achieving broader financial goals and lasting impact. How do you begin? Starting your asset collection might seem daunting, but everyone has to start somewhere. Initially, it's about recognizing the potential assets already within your reach and understanding how to capitalize on them. For many, this might mean starting with savings to invest in stocks or mutual funds, or using personal skills to create a service that generates income. As we move forward, remember that the journey to wealth is not about acquiring assets indiscriminately. It's about choosing the right assets that align with your financial goals and lifestyle. What's next? Now that you have a foundational understanding of assets and why they are crucial in wealth building, the next step is learning how to acquire them effectively. In the upcoming chapter, we'll explore how to start your asset portfolio, even with limited resources, and set the stage for future financial growth. Stay tuned as we dive deeper into acquiring your first asset in Chapter 2. We will uncover strategies that are not only practical but also essential for laying the groundwork for your asset management journey. Chapter 2: Acquiring your first asset. Embarking on the journey to acquire your first asset is both exhilarating and daunting. However, the key to successful asset accumulation often lies in starting small. This approach minimizes risk and provides learning opportunities without the pressure of significant initial investments. 1. Assessing your current resources. The first step in acquiring an asset is assessing your current resources. This could be savings, a small inheritance, or even free space in your home that could be turned into a rental. Understanding your financial starting point will help you decide which assets are within reach and sensible to pursue. 2. Choosing the right asset. Not all assets are created equal, especially when starting. Some assets require less capital but offer higher liquidity, like stocks or bonds. In contrast, others, like real estate, require more significant initial investment but potentially offer higher returns and stability over time. Consider your risk tolerance, financial goals, and the time you can dedicate to managing your assets. 3. Making your first purchase. Once you've identified the asset that best suits your current situation and goals, it's time to make your first purchase. This might involve buying a few shares of a trusted company's stock. It is acquiring a small residential property to rent out. We are investing in a mutual fund with a solid track record. Whatever you choose, ensure it aligns with your long-term financial objectives and capacity for managing it. 4. Leveraging professional advice. If you're unsure about the best asset to start with, consider seeking advice from financial advisors or mentors with asset management experience. Their insights can prevent common pitfalls and guide your initial decisions toward more profitable outcomes. What to look forward to. Having acquired your first asset, the next logical step is protecting it. Many new asset owners overlook this crucial phase, focusing solely on acquisition. However, protection is paramount to ensure your asset retains its value and continues to contribute positively to your financial health. Chapter 3 delves into the essential strategies for protecting your assets. From choosing the proper insurance to understanding legal structures that safeguard your investments, we'll cover all the bases to help you secure your hard-earned assets against potential risks. Stay tuned as we explore how to not just own assets but keep them flourishing under your care. This next chapter is vital for anyone serious about building and maintaining wealth through intelligent asset management. Chapter 3 Protecting your assets. Safeguarding your investments for long-term security. Once you have acquired an asset, the next critical step is to protect it. This chapter explores the essential strategies for safeguarding your investments, ensuring they continue to contribute to your financial goals without undue risk. 1. Understanding the importance of asset protection. Asset protection is not just about securing your investments from theft or physical damage, it's also about guarding against legal and financial vulnerabilities that could undermine their value. Effective protection strategies help ensure your assets continue growing, provide income, and remain shielded from unforeseen liabilities. 2. Legal structures and insurance. One of the primary asset protection methods is through legal structures such as LLCs, limited liability companies, or trusts. These structures can provide a legal shield, separating personal liabilities from your investment risks. Additionally, insurance plays a crucial role. Property insurance for real estate. Liability insurance for business assets. There are specialized insurance policies for unique assets like artworks or intellectual property. 3. Risk management through diversification. Diversification is another critical strategy in asset protection. By spreading your investments across different asset classes such as stocks, real estate, bonds, sectors, and even geographical locations, you can mitigate the risk of significant losses if one investment suffers. 4. Regular asset reviews and management. Protecting your assets also involves regular management and review. This includes: I am keeping abreast of market conditions and economic trends that could affect your assets. You are regularly reassessing your asset protection strategies and adjusting them as needed. We are ensuring compliance with all relevant laws and regulations to avoid legal issues. What to look forward to. Now that your assets are well protected, it's time to consider enhancing their value. Simply owning assets isn't enough, you must actively work on growing their value over time. In Chapter 4, we will explore strategies for asset appreciation. You will learn how to increase the value of your investments through various tactics, such as strategic improvements to real estate, reinvesting dividends from stocks, or optimizing a business's operational efficiency. This proactive approach is crucial for transforming your initial investments into robust sources of wealth. Stay tuned as we explore how you can maintain and significantly enhance the value of your assets, setting the stage for more significant financial growth and security. This next chapter is essential for anyone looking to increase their wealth actively through intelligent and effective asset management. Chapter 4 Asset Appreciation Tactics. Enhancing the value of your investments. After securing your assets, the focus shifts to growing their value. Asset appreciation is a vital component of wealth building, allowing you not only to maintain but also increase your financial worth over time. This chapter delves into various tactics you can employ to enhance the value of your investments. 1. Real estate improvements. Strategic improvements can significantly boost property value for those invested in real estate. This might involve renovating key areas like kitchens and bathrooms, improving landscaping, or updating fixtures and fittings to modern standards. The goal is to make the property more appealing to buyers or renters, thereby increasing its market value and rental income potential. 2. Reinvesting dividends. If your assets include stocks, particularly those that pay dividends, reinvesting these dividends can be a powerful tool for compound growth. By automatically using dividends to purchase more shares, you increase your holdings and potential for appreciation without additional out-of-pocket expenses. 3. Enhancing business operations. For asset owners who manage businesses, increasing efficiency and productivity can directly influence the business's overall value. This might include investing in new technologies, improving supply chain management, or optimizing marketing strategies to boost sales and profitability. 4. Staying informed and adapting. Asset appreciation also requires staying informed about market trends and economic shifts. Being adaptable by recognizing when to hold on to or sell an asset is crucial. This means continually educating yourself, attending seminars, and perhaps even consulting with experts in your investment areas. What to look forward to? With a growing portfolio of appreciating assets, the next step is to manage them effectively to ensure they continue to provide value and align with your overall financial strategy. In Chapter 5, we'll explore effective asset management strategies. This includes setting up systems to monitor your assets, making informed decisions based on performance data, and understanding when to diversify or consolidate your holdings. Effective management not only preserves the value of your assets but can significantly enhance their growth, ensuring your investments continue to meet and exceed your financial goals. Stay tuned as we delve into the nuances of managing a diverse and growing asset portfolio, providing you with the insights and tools necessary to become a savvy and successful asset manager. This next chapter is essential for maintaining momentum in your wealth-building journey. Chapter 5: Effective Asset Management. Optimizing the performance of your portfolio. Once your assets are appreciating, effective management becomes crucial to sustain and enhance their growth. This chapter focuses on strategies for managing your assets efficiently, ensuring they contribute positively to your financial objectives. 1. Monitoring and performance analysis. Regularly monitoring your assets is crucial. This includes tracking their performance, grasping market trends, and assessing economic influences that might affect their value. Employ financial management software or engage experts to assist in analysis and reporting. Adopting this data-driven strategy enables you to make well-informed investment decisions. 2. Strategic decision-making. Based on performance analysis, strategic decision-making involves knowing when to buy, hold, or sell assets. It also includes deciding whether to reinvest earnings into existing assets or diversify into new areas. These decisions should align with your long-term financial goals and risk tolerance. 3. Utilizing professional help. As your asset portfolio grows, it might become necessary to engage financial advisors, investment managers, or other professionals who specialize in asset management. These experts can provide valuable insights, help navigate complex financial landscapes, and offer advice tailored to your needs. 4. Leveraging technology. Leveraging technology can significantly enhance asset management in today's digital age. Technologies like blockchain for secure transactions, AI for predictive analysis, and automated investment platforms can streamline operations and improve portfolio management accuracy. With a well-managed and growing asset portfolio, the next logical step is to explore how diversification can further enhance your financial stability and growth potential. Chapter 6 will delve into the importance of diversifying your portfolio. Diversification is not just about spreading risks, but also about seizing opportunities in different markets to maximize returns. We'll discuss identifying new investment opportunities, balancing your portfolio to mitigate risks, and strategically allocating resources to other asset classes. Stay tuned as we explore comprehensive strategies for building a diversified and resilient asset portfolio that can withstand market fluctuations and capitalize on emerging opportunities. This next chapter is crucial for anyone looking to broaden their investment horizons and solidify their financial future. Chapter 6: Diversifying your portfolio. Spreading risk and seizing opportunity. As you become more adept at managing your assets, diversification is the next strategic step in building lasting wealth. Diversification is not just a defense against risk, it's an approach to capitalize on various opportunities that different markets and assets offer. This chapter explores effectively diversifying your investment portfolio to optimize safety and growth. 1. Understanding diversification. Diversification involves spreading your investments across different assets, industries, and geographical locations. This strategy reduces the risk that a failing investment could significantly harm your financial health. The idea is that when one market or asset underperforms, another in your portfolio may outperform, balancing the scales and maintaining steady growth. 2. Choosing the right mix of assets. Deciding how to diversify depends on several factors, including your financial goals, risk tolerance, and investment timeline. A well-rounded portfolio might include stocks in various sectors and industries, bonds with differing maturities and issuers, real estate in diverse markets, commodities, and perhaps even alternative investments like cryptocurrencies or art. 3. Rebalancing regularly. Diversification is not a set-it-and-forget-it strategy. Regular rebalancing requires the portfolio to align with your financial goals and risk tolerance. As market conditions change and certain investments outperform others, rebalancing helps maintain the desired asset allocation by buying or selling assets as needed. 4. Evaluating new opportunities. Always be on the lookout for new investment opportunities. Emerging markets, new technologies, and changing economic trends can present lucrative opportunities. Staying informed through continuous education and perhaps consulting with financial experts can help you take advantage of these prospects while maintaining a balanced portfolio. What to look forward to. You are better positioned to achieve long-term financial stability with a diversified portfolio. But how do you ensure these investments align with your life goals and financial aspirations? Chapter 7 will discuss how to align your asset portfolio with your long-term financial goals. This is crucial for ensuring that your investments grow in value and support your broader life plans, including retirement, wealth transfer, and philanthropic endeavors. Stay tuned as we explore strategies to ensure your diversified investments work harmoniously with your future aspirations, helping you build a secure and purposeful financial legacy. This next chapter will be essential for integrating your financial strategy with your personal and family goals. Chapter 7: Aligning assets with long-term goals. Harmonizing investments with future aspirations. Building a diversified portfolio is a significant step toward financial security, but ensuring these investments align with your long-term goals transforms good financial planning into a genuinely personalized wealth strategy. This chapter delves into methods to ensure asset management supports broader life objectives, including retirement planning, legacy building, and other personal aspirations. 1. Defining long-term goals. Start by clearly defining what your long-term goals are. These could range from achieving financial independence and providing for your family's future education to leaving a charitable legacy. Understanding these goals will guide your investment decisions, ensuring they contribute not just to wealth accumulation but to fulfilling these life objectives. 2. Strategic asset allocation. Asset allocation involves dividing your investment portfolio among different asset categories. This division should reflect your goals, time horizon, and risk tolerance. For example, ensuring a mix of income-generating and growth-oriented investments is crucial if retirement is a key goal. Tailor your portfolio to change as your goals and life circumstances evolve. 3. Incorporating goal-oriented investments. Specific investments can be particularly effective for particular goals. For instance, if saving for college is a priority, 529 plans or Coverdell education savings accounts might be beneficial. If building a legacy is necessary, consider investments with long-term appreciation and stability potential, such as blue-chip stocks or real estate. 4. Regular reviews and adjustments. Life is dynamic, and so should be your investment strategy. Regularly review your investments in light of your evolving financial situation and life goals. This might mean adjusting your asset allocation, taking more or less risk based on your age and financial security, or reallocating investments to address new goals or changes in the economic landscape. What to look forward to. With your investments aligned with your long-term goals, you can now focus on actively generating income from these assets. This is the key to building wealth and enjoying it sustainably over the long term. Chapter 8 explores various methods for generating income from your assets. Whether through rental properties, dividends from stocks, or businesses you own, understanding how to effectively extract income from your investments is essential for realizing the practical benefits of your financial strategies. Stay tuned as we discuss how to turn your assets into consistent and reliable sources of income, setting the stage for financial independence and the ability to reinvest in your goals and passions. This next chapter is crucial for anyone looking to actively harness their assets to support their lifestyle and financial ambitions. Chapter 9: Scaling your asset-based income. Enhancing and expanding your financial returns. Once you've established a reliable income stream from your assets, the next step is to scale this income to achieve greater financial security and independence. This chapter focuses on strategies for increasing the revenue generated from your investments, ensuring that your financial growth keeps pace with your evolving needs and aspirations. 1. Reinvesting income. One of the most potent tools for scaling income is reinvesting the earnings you receive from your assets. For instance, using rental income to purchase additional properties or reinvesting dividends into more stocks can compound your returns and accelerate wealth accumulation. 2. Improving asset efficiency. Maximizing the efficiency of your assets can significantly increase your income. This might mean renovating properties to command higher rents or better occupancy rates in real estate. For businesses, it could involve streamlining operations or adopting new technologies to boost productivity and profitability. 3. Exploring new markets. Diversification isn't just a risk management tool, but also a growth strategy. By entering new markets or investing in emerging sectors, you can tap into new sources of income that complement your existing investments. This might include international markets, latest real estate sectors like green buildings, or innovative industries like renewable energy. 4. Leveraging financial instruments. Financial instruments such as options, futures, and leveraged ETFs offer ways to increase income potential from existing investments. These tools can provide higher returns but come with increased risks, so they should be used judiciously and preferably under the guidance of a financial advisor. 5. Building strategic partnerships. Collaborating with others can unlock additional income opportunities. This could be through joint ventures in real estate, partnering in a business venture, or pooling resources with other investors to pursue more significant and potentially more lucrative projects. What to look forward to. Maintaining an ethical approach to your wealth-building journey becomes crucial with your income effectively scaled. It's not just about making more money, it's about doing so in a way that aligns with your values and contributes positively to society. In Chapter 10, we explore the importance of ethical wealth building. This includes understanding how your investments impact the community and environment and ensuring your methods for growing wealth sustain not just your financial future, but also the well-being of others. Stay tuned as we delve into the principles of responsible investing and the practices that can help you build a legacy of prosperity and positive impact. This next chapter is vital for anyone looking to achieve financial success without compromising their ethical standards. Chapter 10: Ethical Wealth Building. Investing with integrity and impact. Maintaining an ethical approach to wealth building and management becomes increasingly important as your financial landscape expands and your asset-based income scales up. This chapter emphasizes the significance of ethical wealth building, guiding you through integrating your financial success with positive social and environmental impacts. 1. Understanding ethical investing. Ethical investing involves making investment decisions that reflect your values and the broader impact of your investments on society and the environment. This can include avoiding investments in industries that contradict your values like tobacco or firearms, and favoring those that promote social good like renewable energy or healthcare. 2. Socially responsible investing. SRI and environmental, social, and governance (ESG) criteria. SRI and ESG investing are approaches that consider an entity's impact on environmental stewardship, social justice, and corporate governance. By incorporating ESG criteria into your investment decisions, you can contribute to societal benefits while targeting financial returns. 3. Creating a positive impact through investments. Ethical wealth building is not just about avoiding harm, it's also about actively doing good. This could mean investing in businesses that provide essential services, support community development projects, or contribute to advancements in sustainable technologies. 4. Measuring the impact of your investments. It's important to track not just the financial return on your investments, but also their social and environmental impact. Tools and metrics, such as impact reports and sustainability assessments, can help you understand the broader effects of your investment choices. 5. Balancing profit and principal. While investing ethically is crucial, you must maintain a balance to ensure your financial goals are met. This involves regularly reviewing your portfolio to ensure it remains aligned with your ethical standards and financial objectives. What to look forward to. Building wealth ethically sets a strong foundation, but challenges inevitably arise. The next step in your journey is to learn how to navigate these challenges effectively, ensuring your wealth remains protected and continues to grow despite obstacles. In Chapter 11, we will discuss navigating challenges in asset management. From economic downturns to personal setbacks, you'll learn strategies for overcoming obstacles that might threaten your investments. We'll explore how resilience, flexibility, and informed decision-making can safeguard your assets and sustain your path to long-term wealth. Stay tuned as we prepare you for the inevitable ups and downs of managing a diverse and ethical investment portfolio, equipping you with the tools to remain steadfast and victorious in your wealth-building journey. This next chapter is essential for anyone facing the realities of financial management in a complex and ever-changing world. Chapter 11: Navigating Challenges in Asset Management. Overcoming obstacles for sustained wealth building. Every investor encounters challenges, whether from market downturns, regulatory changes, or personal life events. This chapter focuses on strategies to effectively navigate these challenges, ensuring your assets continue to grow and contribute positively to your financial goals, even during difficult times. 1. Economic downturns and market volatility. Economic downturns and market volatility can severely impact asset values. The key to navigating these periods is maintaining a long-term perspective and avoiding panic selling. As discussed in earlier chapters, diversification also plays a crucial role in mitigating risk. Additionally, keeping a cash reserve can provide liquidity and reduce the need to sell assets at a loss during market lows. 2. Regulatory changes and legal challenges. Changes in laws and regulations can affect asset management, from tax implications to investment restrictions. Staying informed through trusted financial news sources and consulting with legal and financial advisors can help you adapt to these changes proactively. It's also wise to ensure compliance and review legal structures around your assets regularly. 3. Personal setbacks. Personal setbacks, such as health issues or family emergencies, can disrupt your ability to manage your assets effectively. A robust management plan, including possibly delegating responsibilities to trusted advisors or family members, can help maintain continuity. Insurance policies and emergency funds are also critical in providing financial cushioning during these times. 4. Technological and operational risks. With the increasing use of technology in asset management, cybersecurity threats and operational risks can pose new challenges. Implementing strong cybersecurity measures and maintaining up-to-date technology systems are essential to protecting your digital assets and information. 5. Emotional decision-making. Investing can be emotional, especially during turbulent times. Developing a disciplined approach to decision-making, guided by a well-structured investment plan and objective advice from professionals, can help prevent emotional responses from derailing your investment strategies. What to look forward to. Having strategies to navigate these challenges prepares you to protect your wealth and continue its growth. Next, we focus on securing this wealth for the long term, not just for ourselves but also for future generations. In Chapter 12, we will explore securing your wealth for the future. This involves estate planning, setting up wills and trusts, and considering other mechanisms to ensure that your assets are distributed according to your wishes and continue to benefit your loved ones after you are gone. Stay tuned as we delve into the details of financial legacy planning, providing you with actionable insights on protecting and perpetuating your wealth across generations. This next chapter is crucial for anyone looking to leave a lasting impact through financial achievements. Chapter 12: Securing Your Wealth for the Future. Ensuring long-term protection and legacy planning. After navigating through various challenges and continuing to grow your wealth, securing this wealth for the future is imperative. This chapter focuses on strategies for estate planning, establishing wills and trusts, and considering other legal mechanisms to ensure your assets are managed and distributed according to your wishes after you're gone. These steps are crucial for leaving a lasting legacy and providing for future generations. 1. Understanding estate planning. Estate planning is not just for the wealthy, it's a crucial step for anyone who wants to ensure their assets are appropriately handled after their death. It involves setting up legal structures, like wills and trusts, to manage and distribute your assets. It also includes tax planning to minimize the tax burden on your heirs and ensure that the maximum value of your estate is preserved. 2. Setting up wills and trusts. A will is a legal document specifying how your assets should be distributed upon death. It can appoint guardians for minor children and specify your wishes regarding funeral arrangements. Trusts offer more control over how your assets are distributed and can provide tax benefits and protection from creditors. They can be structured to release funds to beneficiaries at certain ages or milestones, supporting long-term goals and responsible management. 3. Considering life insurance. Life insurance can be a part of estate planning, providing immediate financial support to your family after your death. It can help cover estate taxes and other debts, ensuring your assets are not liquidated under unfavorable conditions. 4. Succession planning for businesses. If you own a business, succession planning is essential. This process ensures the right people are in place to continue the company, maintaining its value and operations without disruption. Planning involves training successors, establishing clear rules for transition, and possibly setting up buy-sell agreements. 5. Communicating with family and heirs. Open discussions on estate planning are essential. Talking about your intentions with family members and potential heirs can help avoid misunderstandings and disputes following your passing. This transparency ensures that all parties are aware of your desires and the rationale for your choices. What to look forward to. With your wealth securely planned for the future, the focus shifts to the broader concept of financial independence. Achieving this independence secures your financial future and empowers you to make decisions that can positively impact your community and the world. In Chapter 13, we explore the path to financial independence. This includes strategies for maintaining and growing your wealth to free you from financial worries and enable you to live life on your terms. We'll discuss balancing income generation with capital preservation and how to make impactful decisions that reflect your values and aspirations. Stay tuned as we guide you through finalizing your journey toward complete financial freedom, providing insights into living a fulfilling life enriched by financial security and independence. This next chapter is essential for anyone aiming to use their wealth to achieve personal fulfillment and make a lasting impact. Chapter 13: Toward Financial Independence. Achieving autonomy and influence through wealth. Financial independence is a pivotal goal for many, offering security and the freedom to make choices that can lead to a more fulfilling life. This chapter discusses how to maintain and grow your wealth in a way that supports your independence and enables you to have a positive impact on the world around you. 1. Defining financial independence. Financial independence means having enough wealth to live on without working actively for necessities. It's about reaching a point where your assets generate enough income to cover your lifestyle indefinitely, allowing you to choose how, when, and if you work. 2. Strategies for sustaining wealth. It's crucial to balance income generation with capital preservation to sustain wealth. This includes: we continue to invest wisely, focusing on growth and income-producing assets. Regularly reviewing and adjusting your financial plan to adapt to changing economic conditions and personal circumstances. 3. Making impactful decisions. With financial independence, you have the opportunity to make decisions that not only benefit you but also have a broader impact. This could involve supporting charitable causes or starting a foundation. We are investing in community projects or social enterprises. You use your experience and resources to mentor others or fund new ventures. 4. Living on your terms. Ultimately, financial independence is about living life on your terms. It enables you to pursue passions that might not have been financially viable earlier, such as arts, sciences, or public service. It also provides time to focus on personal development, family, and hobbies. 5. Planning for the unpredictable. While striving for financial independence, planning for unpredictability is essential. This includes insurance policies, emergency funds, and flexible investment strategies that respond to personal health crises or global economic changes. What to look forward to. Having achieved financial independence and a secure method of managing your wealth, the next step is to ensure that you remain informed and adaptable to continue thriving in an ever-evolving economic landscape. In Chapter 14, we explore the importance of staying informed and adaptable. This includes strategies for keeping up with financial trends, understanding new investment opportunities, and adjusting your approaches to ensure ongoing success. We'll discuss how lifelong learning and staying engaged with financial networks can help you remain a proficient and successful investor. Stay tuned as we conclude our journey toward building and maintaining wealth, ensuring you are well prepared to handle the future, whatever it may bring. This final chapter is essential for anyone who wants to continue thriving in their financial independence, equipped with knowledge and adaptability. Chapter 14: Staying Informed and Adaptable. Maintaining success in a changing economic landscape. Achieving financial independence and securing wealth is a significant milestone, but the journey doesn't end there. To continue thriving, staying informed about financial trends and adapting to new circumstances is crucial. This final chapter explores how ongoing education and flexibility can help you sustain financial success in an ever-evolving world. 1. Lifelong learning. The financial world is dynamic, with new technologies, investment opportunities, and economic theories emerging regularly. Committing to lifelong learning through courses, seminars, books, and financial news can keep you ahead of the curve. This not only helps you make better investment decisions, but also enables you to spot opportunities and risks before others do. 2. Leveraging technology. Utilize the latest financial tools and technologies to enhance your investment strategies. From sophisticated asset management software to algorithmic trading and blockchain applications, technology can provide you with a competitive edge by automating processes, increasing accuracy, and facilitating new types of investments. 3. Networking with professionals. Building and maintaining a network of financial professionals and fellow investors can provide invaluable insights and opportunities. These relationships can offer advice, partnerships, or first-hand information on emerging markets and trends. 4. Being flexible with investment strategies. As economic conditions change, so should your investment strategies. This might mean shifting asset allocations, diversifying into new areas, or adjusting your risk tolerance. Flexibility is critical to protecting assets against downturns and capitalizing on new growth opportunities. 5. Reviewing and adjusting goals. Your financial goals may evolve due to changes in your personal life, economic climate, or new priorities. Regularly reviewing and adjusting your goals ensures that your financial strategies remain aligned with your current desires and needs, preventing complacency and maintaining relevance in your financial planning. What to look forward to. As you implement these strategies, your ability to manage and grow your wealth will enhance, allowing you to maintain and expand your financial independence. The journey of wealth building is continuous, and staying informed and adaptable is the key to enduring success. We hope this guide has empowered you with the knowledge and tools necessary to begin and sustain your asset management and wealth building journey. Remember, the path to financial independence is as much about the destination as the journey. Continue to learn, adapt, and grow. You will not only achieve your financial goals but also enjoy a rich and fulfilling life enriched by the freedom and security that financial independence offers. Thank you for listening. Elevate your learning journey with our channel by subscribing today. Each video we create is designed to challenge, inspire, and enlighten. By subscribing, you'll be updated with the latest content and support our quest to make learning accessible and engaging. In the comments, please let us know what you are struggling with. Your feedback helps us tailor our content to serve you better. Join the conversation below, and let's learn and grow together. Let's explore the limits of what we can achieve together. be well and thrive.